Everyone. I guess the next session is on cracking the energy paradigm of tomorrow's green data centers. My name is Martin Krastev. I work for a specialist corporate finance advisory firm called IDCM. We arrange debt and equity for infrastructure projects, including digital infrastructure. But I guess the reason why I'm here is because about half of our deals are actually focused on renewable energy. And suddenly in the last few years, most of our clients who naturally develop solar, wind, and battery storage projects suddenly started getting very excited about data centers. And we've closed our first deal a few weeks ago where a solar developer suddenly started developing data centers, and we raised 200 million of equity for them. And today we have a great panel of professionals in the digital infrastructure space, some data center developers, some other digital infrastructure project developers. And I guess I'll start first with Alastair and ask him to introduce pure data centers and summarize how he sees the current state of play of the global data center industry.
Oh, okay, I don't know exactly how to do that, but hello everyone. My name is Alastair Collier. I'm the Chief R&D Officer of A Healthier Earth and of Pure Data Centers. I lead the teams that are responsible for building our clean tech infrastructure alongside our data center infrastructure, and that can be anything from urban greening and soil regeneration through to large-scale carbon removal at industrial scale. Pure is a UK-based data center developer. We're primarily based in the EU and the Middle East. We develop in, you probably guess, London, Amsterdam, Madrid, Dublin, Frankfurt, those kind of markets. So capacity-constrained markets where we believe that we can deliver outsized returns for customers and for stakeholders. The reason that Pure acquired my company, A Healthier Earth, is because we develop large-scale sustainability solutions. It turns out that our customers are some of the world's largest purchasers, purchasing 92% of the carbon credits that we generate. And also, we can secure preferential urban, I don't want to say planning, but urban conditions with planners and permitters for the sites that we develop. We're unique as a developer in that we find power, land, we secure planning, permitting, we manage the build of our data centers, and then we operate them as well. About 500 gigawatts of space, either in operation or under development. And yeah, that's a little bit about what I do. I think we certainly see demand continuing to exist in the current availability zones that our customers have. We believe that we know that they are willing to pay a premium if you can secure land in those availability zones. We tried building a completely carbon neutral data center with its own set of 3 availability zones to be attractive, and we didn't find that customers were interested enough to actually dig into their wallets to truly move into what we would describe as a carbon neutral or carbon negative data center. And so we've moved back to continue to develop in existing markets, but doing it in a way that achieves sustainability goals for our stakeholders, whilst potentially cross-selling them carbon credits that they are also purchasing in very, very large volumes. We see that as a strategic advantage for us. We're one of the very few, I think probably the only data center company that I know that's doing that. We've also been present at the last 2 COPs, and we'll have quite a big presence at COP30. We have very strategic relationships with our customers in the sustainability space and see it as a way of unlocking that unpent opportunity out there for space in existing markets.
Alastair, you answered my next question, which was how you see Lab D versus non-core locations. But why do you think you couldn't find clients for this data center that was not in a Lab D location? Yeah, so I mean, it was 3 1-gigawatt campuses, so it was a significant operation. We spent a lot of money with Schneider to actually kind of detail that work out, even move to the point where we're ready for planning and permitting. It came down, they weren't interested in the price and the latency issues. It really came down to those kind of very simple aspects. I think the second thing I would say is that our customers, the hyperscalers, are generally very siloed in their purchasing.
And so you don't see cross-pollination in the SOQs of their sustainability objectives into their purchasing criteria for data centers yet.
Would you mind if I just add to that
Please,
as well?
yeah.
Which is, we're speaking to all the large hyperscalers, and fundamentally the feedback that we're getting is buying the REGO credits and buying credits, sort of greenwashing, if you would say, is the easy fix, and until that's changed and they have a clear drive to go truly green, why would they? You know, they're there to build as fast as they can, as many data centers as they can, and buy the cheapest power that they can to run their data centers. They are not incentivized, other than the tick in the box, which is why this fundamentally is a concern. Unless you can provide cheaper power that happens to be green, it's going to be hard to get them to go that way. Because it's business first, right? They have a mantra to their shareholders for that.
Out of curiosity, you mentioned, so you're totally green energy or renewable data center. When you're baking in the equation, do you consider purely the data center infrastructure, or are you also counting like the cars of the executives to the, do you have a full picture, or specific to the data center infrastructure?
Yeah, so I think first thing to say is we provide a box with a power cable to it. So what our customers do inside that box is completely up to them. So we don't count what they do in the box, and what power they buy is completely up to them, right? So that's the first thing to say. That's not me trying to be a water off a duck's back. It's just that's the nature of the commercial relationships that we have. When we talk about our life cycle assessments, though, for the parts that we can control, so the embodied carbon within our data centers, as well as the operational carbon, yeah, we do full life cycle assessments. We're probably one of, I would argue, the most stringent. We probably push Schneider specifically the hardest in having to go into their third-party supply chain and the full life cycle assessments of the materials they're providing us, as well as then looking at things like the operational carbon intensity of our data centers. We've removed probably about 20% of the carbon in that build from the work we've done, but there's still just a significant amount. You can't get away from the amount of steel, concrete, asphalt, chillers that they require, and they have very clear standards around what they want to have in their setups.
Can I ask one last question around that? Sorry, just as a query then, the power demand of these tenants effectively is the largest and most carbon intensive part of the full cycle, right? If they're sitting there and operating for 15, 20, 35 years, using that amount of power, surely then the goal is to then derive the power from green sources. And so in your parks, are you looking to build wind farms, solar farms with battery storage all combined to supply the parks, or are you just trying to build carbon neutral parks themselves?
So we build primarily in the urban environment because that's where the availability zones are. We're not building energy parks, we're securing grid connections for them.
Okay.
They secure their own PPAs. Generally, most of our customers have secured green PPAs for the work they're doing with us. So and especially, grid intensity in France and the UK is quite low. Carbon intensity is always quite low anyways. But again, that is the customer's prerogative. We're supplying them with a connection, a pipe. What energy they buy through that pipe is really their prerogative entirely. But we have worked with customers to create more sustainable answers to their power because they've asked us to.
I would like to bring Gonzalo to the conversation. Box to fit. What is your strategy and how do you guys fit in this framework?
Yeah. Well, we are a Spanish green data center developer, but we don't consider ourselves as a traditional player in this industry. We come from the renewable energy sector. We are a spin-off of one of the leading companies in Spain called Capital Energy. So that's why we maybe have a different approach, a different mindset in this industry. Since we were founded in 2021, we thought we needed to develop scalable data centers out of the urban hubs, getting robust connectivity and on industrial land which is ready to be developed. So that was our strategy. We summarize this by saying that we bring the data center to the power instead of the opposite, and that we needed to rethink of the location of our assets. And when we say rethink of location, we do not mean developing data centers in the middle of nowhere. We have a site selection process which is quite strict. We have an internal tool which considers more than 200 variables, most of them coming from hyperscalers or AI final users. And we basically focus on 4 things. First is being close to the power. We go there where the power is available. In Spain, for instance, we have regions which are net export regions, so they produce more energy than what they consume, so we want to be there. We look for connectivity, dark fiber, redundant dark fiber, and in Spain, due to the location, we have, I think it's close to 40 subsea cables running into the peninsula, the Iberian Peninsula. There are parts of the Iberian Peninsula which has extreme good connectivity. Lisbon, Madrid, Barcelona is one of that locations. We want to be there. And also we focus on having industrial land ready to be developed. That's another key issue. And the 4th part is having flexible permitting. We have some regions in Spain where they are focused on developing this industry, and they are quite, let's say, quite quick in providing approvals for getting permits. So that's the rough picture. We develop basically scalable data centers with modular growth, because also we think that's what the hyperscalers and our users are looking for right now. That's our approach, our strategy.
And so just to explore the 2 models, the 2 different models, so Alastair, you said it's a box with a pipe, but do you have a feeling whether your clients, the off-takers, are AI or cloud computing colocation clients, and does that matter? And same question for Goodall.
I mean, like I said, we're running a space and a pipe. They could host a party in there, and that's their prerogative. I would say that if I think about my personal view, and this is now very much my personal view on the difference between AI and storage and cloud computing, I think we will hit capacity on AI capacity globally in a relatively short period of time, and demand will switch back to storage. Once you get to a certain level of computing power, efficiency will most likely increase from chipsets. That will reduce demand for space and power. And then it's simply the vast amount of information that we continue to create. What is it? We doubled our human level of information in the last 2 years, and that pace is only quickening with AI. And so I think we'll see a shift back to availability zones becoming even more valuable, as cloud providers don't look to create new availability zones or try to minimize the creation of new availability zones.
To follow up on that for a sec, if you don't mind.
Sure.
Funny to continue to
okay.
go back and ask more questions. But I wonder if your educated professional guess how long you think it's going to be until the world maxes out on AI compute. And then you mentioned that you expect the world to go back to demand for data. I guess that's because there will be no access to AI compute anymore, so data will be the only service available?
No, so it was more that once we get to a sort of floating point of AI capacity, that really there's not a requirement to add more capacity for AI. It's simply that AI is creating so much additional information. I mean, my AI has created vast amounts of additional information that it seems to store, and so that storage requirement will increase. I think we're...
Got it.
I mean, who knows the future on AI? I'm sure others here will know better than me. I certainly sense that from buying signals from buyers that they sense that there may already be an overdevelopment of AI capacity, and that demand may be plateauing with what's available. So if we think about everything, we heard about 5 gigawatts just now, there's a significant amount of availability. It may not all be online at the minute, though.
Cool.
I mean, AI is quite broad, isn't it, I guess?
Yeah.
True. When we say AI, what do we mean by it? Maybe the training LLM side of the AI equation probably could be maxed out, and once it's there, it can be used for the creation, adoption of new applications, whatever that looks like. Then it goes into the usage side of things from enterprise. That's probably where we're going to grow. But we see a lot of AI, LLM dedicated data centers in the US, not so much in Europe. I think we all anticipated we would see quite a bit more of that in Europe, particularly in the Nordics, let's say, but we've seen some of it. I still think we're waiting to see a little bit more, though, but I don't know in terms of your model, is it more enterprise cloud, let's say, the storage side versus the LLM? And the architectures are different, I think, when we look at those two types of data centers as well. If it's dedicated for LLM, I think the design and the architectural type of that data center can have a different look and feel to it. It's perhaps not seen as mission critical like a cloud application.
No, 100%.
Yeah.
Mike, do you want to introduce Schneider Electric and how you guys fit in?
Me? Right. Thank you. Yeah, Matthew Baynes, Schneider Electric. Schneider is a global energy management and solutions organization playing in all areas, all markets, all segments. I'm representing the data center segment, of course, here. Yeah, I think we have I mean, I'm not a finance side of the equation here. This is a finance forum, but I think we certainly play a role. We have a responsibility to support and underpin this market, of course, with our expertise and what we do and the responsibilities we take on as an organization. Talk about COP, of course, which is in Brazil this year, heavily weighted towards climate change and making sure we continue to reduce the temperature increases. And I think data centers, by their inherent nature, are very efficient compared to distributed old enterprise architecture, of course, by that very nature of the design and the continual approach to trying to optimize that and maximize that to be even more efficient on a day-to-day basis, one design to the next. And I think what we really need to try and do, I think Mark Gansey was saying there's 2 gigawatts of probably capacity they can't deploy by the end of this year over a span of 3 years. By anyone's measure, that's a huge amount of data center capacity for the market to not be able to roll out due to grid constraints, I think was his conclusion to that, which is probably a simplified statement, but it's a complex equation and one that we all need to solve. And we probably do need to, as an industry, try to bend the energy curve and decouple data growth from energy usage growth in the data center somehow. And there are ways of doing that, but I think collectively it's through innovation, it's through adoption of new technologies, it's through it's difficult when you're a co-location operator, because I do think your tenants limit you somewhat on what they allow you to do in terms of innovation, whereas what they do for their own data centers is a little bit more bleeding edge, perhaps. I think that needs to change a little bit, because you could probably adopt new and colleagues more innovative technologies. But ultimately, our responsibility is continue to invest. We invest about 5% of our turnover in R&D, which is $1.5 billion euros, sorry, something like that. Schneider is heavily invested in being and offering and engaging in discussions around sustainability all the way through the supply chain. I was going to say coincidentally, but it's not. We've been voted the most sustainable company 3 years in a row by different organizations. So we kind of walk the talk as well in our own organization, and we translate that, what we do ourselves the last 15, 20 years we've produced these reports, we translate that into the R&D and the solutions we can bring to the market to help the industry become more efficient and support the COP30 ambitions. And then support in the consulting of the design and adoption of renewable technologies with our supply side sourcing business and our PPA business, which we have as well. Schneider's quite a broad base. So that's kind of where we play and our responsibility in this. There was a discussion earlier about supply, manufacturing, frameworks, long lead items. That's a different discussion, of course, as well. But in this discussion, it's about developing energy efficient solutions, helping to decouple and really bringing on board that consulting side, the sustainability side, and solutions to become more efficient as an operation.
Alexander, how can you elaborate on what you guys do?
Absolutely. So just coming up from there. So Alex Goodall, entrepreneur, built and sold 2 businesses in the renewable space, most recently one to Statkraft, and headed up their private wire division for about 3 years before starting Clean Energy Capital 4 years ago now. The reason why I came up with Clean Energy Capital as a business, we concluded our institutional fundraise last year and partnered with, we got investment from True Green Capital, an American fund, raising over 100 million for deployment in this sector. The solution that we are bringing to the market, instead of coming to large power users, so obviously data centers being one of them, but we also focus on other very large users of power, is to come with a solution rather than take the consultative approach. I've taken the consultative approach for many, many years, and the core principle of which, to these large users of power, it's not their core business, right? They're there to build another data center, as I said earlier. They're there to build their next site, develop their next site. Their core business is not to then go and build a renewables plant nearby. And so lots of companies like Schneider go to them and say, we've got lots of different solutions, can we consult you, can we bring you lots of different ideas of what to do? And they, of course, want those ideas, but they then very rarely, from what I've seen from the past 15 years of being in the industry, is they very rarely follow up with those because it's not their core business. And so we take a very, very different approach with Clean Energy Capital, which is we know where all the large users of power are in the country, we identify them, and then we search for large parcels of land nearby, secure them under option, and then knock on their door, knock on Microsoft's door, whoever it may be, and say, right, we're building a 50 or 100 megawatt solar farm with some wind and some batteries, 5-10 kilometres down the road from you. You want the power, don't you? And they went, yeah, we do. Not quite sure how to procure you, but we want it. And we said, well, that's fine. If you want to take your time and you're not sure, Amazon's right next door, so we'll speak to them. So we've kind of flipped the procurement process on its head by taking a proactive approach rather than a reactive approach. And it's gone exceptionally well. You may have seen one of our most recent projects has hit the press because it's, I believe, the first large-scale solar farm delivering power. It's just gone into planning, or it should be coming out of planning soon, for IBM's data centre in the UK. That's publicly available information, and we will be delivering a large-scale solar farm to help reduce their on-site power demand from the grid. The brilliant part of this is it's cheaper than grid power. It helps increase the site's resilience, especially during summer when power demand is even greater and cooling is greater from data centres. We are technology agnostic as an industry, as a business, and supplying the data centre industry, what we're trying to do is help increase their capacity, make them go greener, and save money. So it's a bit of a no-brainer. What we've actually found is, we're looking at developments even in sort of West London area, where we can deliver power to that sort of black hole of consumption, actually being able to increase the blue line of these data centres during the peak of summer by having large-scale solar solutions to them. I don't think people fully appreciate what's coming down the line, and I know you said potentially that the consumption is going down, and yes, we're seeing, I think, a small blip in that consumption with people like Microsoft and announcing that they are slowing down their deployment and potentially even withdrawing some from the UK. But I think overall, the overall consumption is still rocketing and will continue to do so. So we have to find the power solution from somewhere. And then, of course, the other problem is that the grid infrastructure is getting the power there. And I think the more distributed generation we create, the more resilience we give to the grid, the more resilience we give to the end users, the customers, by deploying large-scale solar, wind, battery, and whatever else, SMRs potentially in the future, may deliver power to these gigawatt-plus data centres. I really think that is the future, because it's a no-brainer. So that's the elevator.
It's very interesting what you're saying, because I think Alastair is saying, well, we build the data center where the customer is. Gonzalo is saying, well, we'll bring the data center to the power, and you're saying we'll bring the power to the data center.
That's
quite
it.
interesting.
Well, we try and access the existing market as well as the future market. So by going to deploy large-scale power solutions to either the ones in planning or the ones already built, we can deliver tangible solutions to them.
Michael, you do slightly different things. You know, tell us a little bit more about how you see the future of digital infrastructure.
Sure. Yeah, definitely looking at this from a bit of a different lens from probably most people in the audience and certainly on the panel. Some of the things that, so I'm a serial entrepreneur and investor, serial exiter. I've been focused on blockchain adoption my whole professional career. So the lens that I look into this market is hyper-focused on blockchains and disruptive technology. Some of the things that I'm seeing and investing into that have to do with renewables and green energy. One is that I think it is a fallacy of logic to consider that blockchains are more energy intensive than the existing financial and economic infrastructure of the internet, especially when you consider, for example, banking rails, including the energy used from all of the executives internationally, as well as all the armored trucks internationally moving paper, is immense, which is, I don't think, considered in the analysis that's shared to the market. But for example, we led a seed investment into certainly one of the largest Bitcoin mines in America. That is, and this is starting to become increasingly common internationally for digital asset miners and infrastructure providers, is actually to entirely offset their carbon footprint from their revenues, which for a digital asset mine is much easier than for a MasterCard, Visa, and every banking company in the entire world. So I think that's a really quick win for blockchain and green energy power. Secondly, I'm invested into a blockchain protocol that has green energy infrastructure built in at the protocol level. They are building open source software for application developers to be able to leverage this fully built out open source software to create arbitrary applications. But then the cool thing about this blockchain layer, which is, as mentioned, is entirely carbon offset from the protocol level, is that there's an opportunity for a private equity infrastructure business or private equity financing business on top of it, investing into businesses like land with trees, earning carbon credits, and then putting those carbon credits on chain to be used from an arbitrary number of third-party developers, but with a private equity opportunity that is just consistent cash flows from the acquisition of land and the carbon credit business. So that I'm pretty excited about, and creating green energy infrastructure from a protocol level. And then finally, at least ideas off the top of my head, a lot of people here are talking about they are institutional businesses raising institutional capital to create data centers, which is great. Historically, there was no alternative, but I'm invested into now a number of decentralized physical infrastructure companies that aggregate an arbitrary number of compute power from, for example, cell phones, computers, that if you're operating at an institutional level is too small compute at the individual level to be worth the time. But if you aggregate individuals internationally and have an international mesh network powered by cell phones or computers, the collective computing power is substantial, and I'm excited about those opportunities to crowdsource compute. Just a few fun ideas.
There's one other that I saw that was quite cool, which was using, so you mentioned using the blockchain to trace carbon credits. I've also seen it directly used to trace the power as well, so assigning the power to that. And that was quite cool. So sort of a virtual power plant, virtual PPA, rather than just a corporate PPA, actually having the traceable power using the blockchain to trace it was quite a cool thing.
Yeah, for sure. And then an additional fun thing on that is when you start to have assets on chain, like, for example, carbon credits that have a liquid valuation or compute, which has a public public demand and a set valuation, with international interoperable rails like blockchains provide, you can take these assets and use them as currency to pay your staff or pay your providers or pay to buy coffee at Starbucks. And instead of needing to hold, fiat currency paper notes as, in treasury for economic obligations, you can hold assets like carbon or energy or compute as a balance sheet item that is liquid and can be used to buy coffee.
I'll pause here and see if there's any questions from the audience. No questions?
I think that's all. There's a lot of innovation, I think, in here. There's a lot of opportunities in this sector. I think what the direction of travel is all of the innovation that you're talking about, all of the clean energy that you're talking about. I think this hybrid energy source discussion to try and unblock some of the challenges that we have in the industry, so we can accelerate faster, is something that I think we all need to look at, and how we then manage that and how we can make that an active asset on the grid. I think that was talked about earlier. I think that's probably the direction of travel, where the data center becomes an asset to the national grid as opposed to a burden to the national grid, and there's this symbiotic relationship between the two, and I think that's a bit of direction of travel probably that we're heading in as well.
I found the idea of cloud computing interesting. Can you elaborate a little bit more how it works? Who powers all these devices? Who pays for the power in all these devices?
Well, there could be an arbitrary number of business models for this. The main thesis is aggregating compute, which I think the easiest way to understand or think about it is cell phones or computers that have capacity that is underutilized because you're not using your computer 24 hours a day. Plus, even if you were using your computer, you might be open to having 10% slower computer to be able to mine dollars of compute. Or maybe you would not trade dollars of compute for 10% slower Wi-Fi speed, but there's a lot of people in the world that would make that trade. And if you have millions of people signing in to earn pennies or dollars by contributing the additional compute in their device, in aggregate, it creates a pretty significant value proposition. And a fun other thing that I'll bring up with regards to this question, but also just in general, the value of digital assets and blockchain technology to incentivize good behavior or to incentivize engagement in behavior that you desire to have in your ecosystem, whether that is a user actually signing into a decentralized physical infrastructure grid, or a user, for example, inviting a friend to sign up for the digital physical infrastructure grid, or incentivizing data centers to be more green, is having digital asset incentive structures that reward good behavior in ecosystems. So it's an additional way to monetize engagement and to reward traction at an individual or backers level.
On a slightly different topic, I do think that we're seeing data centers scale at something that I don't think people really outside this room really understand. We're talking about gigawatt data centers. They're using the same amount of power as Oxford. It's just like that as a standalone shed is crazy. And to think where that power is coming from is one question, and the next question is how we're getting it there. And I think I know that we're looking at the grid reforms, and we're looking at changing how we charge on the grid, right? So we're looking at local charging and distributed charging throughout the UK, which I think will happen, and that will be one serious way to incentivize heavy users of power to go to where there is cheaper unit rates. But unless we have large movements from government like that, they're just going to continue doing what makes the most business sense for them. Less latency, power is what it is, and we'll go where we can. So I think the main change needs to be driven by central government, but I don't know if they really fully understand what's coming down the pipeline, genuinely, especially because all these hyperscalers are so guarded with what they're doing, for good reason. But yeah, we're speaking to all of them, and when you look at that combined usage of power, if it all gets built, right, which is another question, how the grid is going to take that burden, and we just don't have enough power stations. It's quite that simple. We don't have enough power in the UK to satisfy the requirement that's coming down the road. And in the timescales that they're talking, they can't get connections. So I really do think that distributed power in whatever form is a necessity. And it will get to a point where they'll look at building their own power stations, effectively, in a distributed manner to satisfy very, very large hyperscale data centers for cloud storage, for AI, whatever it may be, for mining of tokens and coins, whatever it may be. But the usage is going hockey stick. Yeah.
Alastair, what's your view? I mean, you had a different view on this earlier. Are you guys looking to start building co-location power station next to your data center?
So I'm sure that these things will happen. My view is probably slightly different. So before I founded A Healthier Earth, I worked for National Grid for 5 years, and I was Vice President of Strategy and Vice President of Engineering Services, something I know relatively well. Look, the UK is moving from a world where we had static production or generation and variable demand to a world of stable demand and variable generation. Our issue is not the volume of generation that we have, and this is a very UK-specific answer. The issue is our ability to transmit it across the country to where demand is. And secondly, our grid is already designed for a peak energy load 3 times what our base load is. So if we can create static demand across the UK. We actually already have the infrastructure to move 3 times the amount of power we do. It's just reserved for 5:10 p.m. on, I think it's the 17th of January, 1991, which was the final of Only Fools and Horses, and it was the first advert break when everyone went to put their kettle on, which is the current UK highest peak energy demand use. So we do have the capacity, but we have to think differently. I think in the UK with regulations, we won't see co-location of data centers and energy generation just because of planning and permitting challenges to do that, and I don't think SMR is going to take off in the UK. Being Canadian, having seen a lot of that and sat in kind of very positive Canadian views on this, our regulator in the UK is not necessarily so positive on SMR.
I agree with that as well, and it's not just the regulator that's the problem. It's everyone wants and needs more power, but I think obviously they've got NIMBYs, right, which has now moved to the term banana, which has built absolutely nothing nowhere at all, right? So, so it's going to be very, very difficult. Though we need the power, it's well, where's it going to be? It's like, well, would you want a small nuclear reactor in next door?
Yeah.
Even I would question that, right?
Yeah.
If something goes wrong, I know they're very safe and all the rest of it, but it only takes one, right?
That's right. So I think ultimately, you know, and again, I work for a company who's got a very clear strategy on focusing on existing markets and moving power to that space, and a very clear sustainability agenda. I think in developed European markets, you will see continual concentration into markets, and grids will develop to support that concentration. That's what's happening in Ireland. If we look at Airgrid, 15 years out in their plans, that's what their plans out. Yeah, I mean, it is. It is what it is. I think in developing markets, you may see these different models, though.
And you were saying that the power usage of data centers is flat, and it's fairly flat. However, obviously the cooling does ramp up. You know, you look at temperatures going the way they are, and the impact that genuinely global warming is happening around the world is that outside temperatures are getting higher and higher. Summer temperatures and summer extremes getting higher. One of the nice things about adding the renewables to the mix is, for example, solar. As the demand goes up, as the temperature goes up, you tend to have sunnier summers. Power generation on the grid or locally to that consumer goes up accordingly, and that's really what we're looking at. Sort of we're not taking them off the grid, but we're helping them, give them resilience to those peak problems. You know, we were speaking to some of the data centres in West London when they had to ramp down in the summer, and they had serious penalties to pay, and it was a serious problem. Was it 2 summers ago when they had the really hot summer, and they had to ramp down their systems? So. Yeah, and then they suffer the heavy penalties from their tenants. So that can't happen.
Yeah, and I mean, just as a final comment on that, one of the things that we're doing, for example, is in our North London data centers, we're building the world's largest living wall, wrapping our data center. We're also using something called biochar that to
Living with
reduce its water
plants?
use.
Yeah, it looks great.
Yeah.
It looks
Yeah.
really good.
Yeah,
Cool.
it'll be pretty cool. It reduces water use by 75%, so it won't die in a drought. But it also gives us the benefit of reducing the temperature inside our building by only a few degrees, but in this market, a few
Significant,
degrees
better than
matters.
nothing,
Yeah, significant. I learned. So, there are ways that we can think about our data centers differently, that we can build solutions that meet these needs, that also potentially meet community needs, without always having to focus on power. And that's my entire job. Like I know I'm talking about power at a conference, but my entire job is to do everything but the power, because the power is easy. We try to solve everything else.
But this is what it's all about, I think. This industry is always innovating, trying to innovate at least anyway, to get every little inch of efficiency or anything, any gain. It's not even maybe for an advantage, it's just to be, from your social and responsibility perspective as well, it should give you an advantage, hopefully.
Yeah,
but again, some of the tenants don't let you do so much. So you're looking outside of the envelope now.
That's right.
To see what you can do yourselves that doesn't impact any SLAs, doesn't need to be contractual, maybe, to give you an edge or just to be better citizens, to support COP30, that's the topic here. That's that general theme of being...
So we think in 3 circles. So we think of the circle of the red line around our planning. That's circle 1.
Yeah.
What can we do inside that, outside of the data hall? Everything in there is in my remit. Then we have a second circle that's 5 miles around our data center. What can we do within a 5-mile radius of our data center? So that we planted 1,800 trees in Barnet, 3.5 miles from our data center 4 months ago. They were our trees. It was our biochar. It was our scientific protocols. We've done a bunch of other work in Indonesia in a similar space. And then we have a national barrier that we draw. And we try to have an impact at all 3 levels so that we can mitigate the impact of our core data center in the urban environment.
Cool.
And that's how we're trying to move away from the power conversation, because we have such little influence on it.
Is this the social license side of things, or is this to win more business with the hyperscalers?
It's all of it. So it creates a social contract with the communities we operate in that is truly unique. I think we're a very unique developer, not just data center, but broad infrastructure developer. It creates strategic relationships with our customers. We can have conversations with them that no other developer can. And it also makes money. I have a very clear mandate that I need to be non-value dilutive to the overall platform. So my solutions need to make monetary sense in and of themselves. So I have my own investment team. I have my own commercial team. We generate 15% unlevered yields. We don't dilute the overall equity platform of the pure data center group.
And Alastair, what do you do with the heat when you cool the data center? Do you sell the heat?
Look, heat is, everyone talks about heat. Microsoft stuck their data center in a tube and put it in the water and heated a pool with it. Look, the heat of a data center is really low quality. It's low pressure, it's low temperature. It needs a significant amount of upgrading to go into heat networks. The heat networks don't exist in most of the European markets that we're talking about. In my opinion, to date, of all the research that we've done, heat reuse out of data centers is a red herring. It is not something that we have been able to monetize or create meaningful, sustainable, real-world sustainable delivery from using. So we don't do anything with it at the minute.
Can I ask, so this living wall of your data center, how much more of an investment is it to set that up? And I wonder whether, so like the economic benefit aside from the social responsibility is it cools down the machine. So is there additional efficiency from that? And does it offset, I wonder
Yeah, so it creates a level of PUE efficiency that is not my space to calculate, but there is a PUE gain from a reduction of temperature inside. You just have less cooling to do. It may only be a degree, but it's still something. But the additional costs of it is variable. This was our first, the world's largest living wall is our first living wall. It's more expensive than we would like it to be, but we've certainly found that for the next one that we're building, we have economical solutions that would be no more expensive than standard cladding, or high-end cladding you would need to put on a data center in an urban environment anyways. You can get to almost cost parity.
Cool.
Yeah, that's cool.
Can I, one of the things that, you said that you do the sort of 5-mile circular around the data center, which is sort of very similar to what we do, depending on the power demand. Obviously, the more power the data center uses, the further away we can go and run a cable down the road into the data center. One of the things that we do on the site is obviously, let's say you're doing solar plus and battery with some wind, not all the land that we secure can be used for power generation. And so we look to add in B&G and carbon credits on the unused land. So the full site is being used for the benefit of that data center.
Yeah, I mean, hey, a biodiversity credit in the center of
Biodiversity net
London.
gain.
Yeah, biodiversity net gain credit in the center of London costs 500,000 for one credit.
Yeah.
Like, yeah, if you can produce a credit or offer credit, like, fantastic.
I mean, obviously, we're not delivering large-scale solutions to Canary Wharf because, you know, we're not going to do a floating solar field in the Docklands or something. But, you know, we are looking to develop large-scale systems even inside the M25.
Yeah.
Right? And deliver power to large-scale data centers.
We need it. We need it.
I think we're out of time, but thank you very much for the great discussion.
Thank you.
Yes.
Thank you.